Hello, everybody. Welcome to a sunny, beautiful Thursday, July 30th. Scott Riley, the market update desk with Mortgage One, NMLS number 157524. We saw that the Tigers Tuesday night walloped Baltimore 12 nothing. So obviously, AJ Hinch was nervous about me trying to petition to be a head coach for the Tigers. He rearranged his lineup. But now we see, after last night's debacle, with our relievers and costing a win with a great Scooble start. We think Scott Harris is nervous about us taking over the GM position also because he's calling up finally Max Clark, the uber talented outfielder for the Tigers, and maybe moving on from one of the incredibly low production hitters that they have. In fact, actually, they dropped Jake Rogers the other day. Maybe they'll get rid of another sub 200 hitter. In the market today, we saw yesterday the Fed announced that they will continue their pause on interest rates. So they're maintaining the Fed funds rate between 3.5 and 3.75%. Chairman Warsh came out and reiterated a lot of what was in the previous commentary. But we do note there were actually three dissenters. So it was a 9-3 opinion on keeping rates where they are. So that question of dissenters has grown from 1 to 2 to now 3. So that is something to pay very close attention to. Now, he did talk about that they are closely watching yields in the treasury market so that the market doesn't interpret things other than what they're actually saying. So it's very interesting that he talked about bond yields. And he said they're going to continue to watch and make decisions based on current economic data. It's a big comment by him because so much of what the Fed looks at and has specifically looked at in the past is rear-looking data. And with Chairman Warsh, he is starting to move the Fed to more real-time data. That's a very, very important facet of what he's trying to bring to the table. Yesterday, we also got PCE, personal consumption expenditure. It did come in a little bit better than expected. So headline PCE fell, so a minus 0.1%. That brought the year over year down 0.3%. So that's really good. Core came in at plus 0.1. Both those numbers were better than the market was expecting. So very positive. We did expect it because we had really cool data on the CPI and PPI. So that does kind of go together. Next month, probably going to see a little tick up because oil prices increased during July. Now, we also saw within the PCE report, the BEA stated in August for the September data that they're going to send out, they will start a new methodology within calculating some of the data in several components. And one of them is very important that we've talked about. One, they're going to change some of the methodology and calculation within legal services and then also within computer software. But most importantly, they're going to reanalyze the portfolio management component of PCE. That's important because the percentage that portfolio managers charge really hasn't changed, but the gross dollar amount that they are being paid has increased because portfolio sizes have increased with the run up within the stock market. So it's really deflationary, not inflationary. In fact, some estimates show that it adds about 0.4 to the overall CPI number. So that's really good news there. On a downside, we did get first look of Q2 GDP yesterday, and that came in at plus 1.5%. The market was expecting plus 2%. So a little bit of a downer there. We're seeing, all in all, a little bit better day today within the market. We had a negative day yesterday. We're seeing the Dow's up 530. We're seeing oil slightly down at 65 cents to 83.31. Brent crude fell $1.51 to 89.23. So important. Both those are 80 handles now. We've fallen below that 90 psychological barrier. Maybe we can hold it. We're seeing 10-year Treasury pull back ever so slightly at minus 1 basis point to 4.66. You know, when we were in last week, we had gotten down to, I think, 4.54. So we have definitely gone up. Hopefully we start to see some receding of that and get below some important downward resistance lines. In stocks today, because it is earnings season, we saw Microsoft did beat earnings, so their stock is up today. Meta definitely missed on their estimates, so their stock has definitely fallen off. So kind of interesting what's going on in the market there. We will keep you up to date. It's a very active time right now. We're helping buyers run some numbers, help them get pre-approved, run through all the options. Also helping a lot of buyers or borrowers refinance so that they can consolidate some debt, save hundreds, if not thousands, on their overall debt structure, plow that back into the new mortgage payment, and actually pay the house off faster. Give us a call. We'll give you the data. 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.